I believe that it's still a tremendous risk-reward investment for the long term. Will we see volatility? Fully expect it. We could bump up here against 100,000. I mean, we're right at 99.2 right now, and so we could bump up against that level, kind of push through, have a lot of shorts pile on, and then have it collapse back down into the 90s or even in the 80s. I don't know. Bitcoin is volatile, so I expect volatility. I still expect volatility. Oh, this is a place to store my value for a long time. Just forget about the volatility. This is a place to tuck it away and trust that it's going to be okay. Much like gold, the difference is you can access it anywhere around the world. So if something happens in your home country, if you're in a hostile area, you can just pick up and leave, know your 12 words, and your Bitcoin, you're not taking it with you. It's everywhere. It's wherever you go. As long as you can access the internet, you can get to it.
With its steady 4-year cycles and increasing adoption, Bitcoin's long-term potential continues to charm investors. Bitcoin's increasing trajectory, in spite of continuous market volatility, positions it as a key component of financial systems of the future. This changing story is being clarified by experts such as James Lavish. James recently discussed his thoughts on Bitcoin's distinct cycles, its function as an inflation hedge, and the obstacles it has in achieving wider recognition in an interview with Kitco News. Experienced institutional investor James acknowledged that it took him years to completely understand the intricacies of Bitcoin. He underlined that although supporters of hard money acknowledge the worth of Bitcoin, its perceived complexity prevents it from being widely used. James also pointed out that Bitcoin's consolidation phase is coming to an end, suggesting a potentially revolutionary future. Let's examine some of James Lavish's most important observations and speculate about what the future holds for Bitcoin. Don't forget to like this video, subscribe to the channel, and turn on post notifications for daily content. Enjoy the video.
There are some old timers, OGs in the gold industry that have been doing this for so long. All right, so the way it's been described to me by Larry Lepard, is one of my partners in my hedge fund, is they've been fighting a battle here for like 30 years, and it's finally coming due. And so when they hear about Bitcoin and they hear it's digital gold and it's the next thing, I think what goes to their mind is, I don't want to fight this battle for another 30 years with just a new asset, So that's one thing that's out there. The second thing is just, it's difficult to understand. Bitcoin's not easy to understand. It took me a long time. I mean, I was an institutional investor, so I just hammered the mic, but I was an institutional investor for almost 30 years. And it took me a good 3 or 4, it took the third time I finally heard about it and I started to study it rather than just dismiss it. It's a difficult concept to get your head around. And then once I started to study it, it took me a while to really get my head around what it meant and why it was a sea change in finance and for hard money. But the reality is, gold and Bitcoin, the people who follow gold and Bitcoin, hard money enthusiasts in particular, they believe in everything. They're like super aligned with all their thoughts and reasoning and understanding what's going on with the debt and the expansion of the money supply and how this can be protective for them. I think it was well received. I haven't talked to too many people about it yet, but there were a lot of people taking photos of my slides, and I could see people super engaged. And then there were some, audible sighs, and my whole thing is like, don't be hyperbolic about the prospect of Bitcoin. Just lead people to understand why it's different, why it's so important, and help them get to the point where they really want to dig in themselves and do some more research themselves and get comfortable with it. It takes a minute. And so, but I believe that there's a lot of people in here who are super open to it. We operate in 4-year cycles, as we've seen. It's a small data set. There's only a few cycles that we can look back to, but that's what has happened in the history of Bitcoin. It's only been around for 15 years. But we are getting at the end of this consolidation phase of this cycle. And so people expected for that to that consolidation to kind of finally close down, and then for us to get some price momentum through and start reaching all-time highs again. Coincidentally, people talk about it being tied to the halving and how it has miners and the price of creating the reward and all that. But in reality, it might be more tied to elections now and just the uncertainty around elections. So getting through that election was a huge inflection point. It took out a lot of uncertainty from the market. Now we have Senator Lummis from Wyoming who's pushing the Bitcoin Act. Yeah. This is a big deal.
Huge strategic reserve in the U.S. It would be massive.
Yeah, exactly.
But selling gold to get there.
Maybe selling some of it, not all of it. But acquiring enough Bitcoin that would match what the gold reserves are now. That's the idea, I believe. And so, but buying 1 million Bitcoin, so just think through that for a minute. Now, you're going to buy 1 million Bitcoin, 200,000 a year for the U.S. Treasury. What is every single country around the world going to do? They're going to think, well, that's 5% of the float right there. That's 5%. If we want to keep up and be a G20, and Bitcoin really does end up being a strategic asset for the world, for a store of value, then we better get in there and buy some too, or we're not going to be able to be one of the top 20 holders.
In his opinion, Bitcoin is a solid long-term investment with good risk-reward potential, according to James Lavish. Although he expects volatility, he believes Bitcoin may reach $110,000 before declining. With a market worth of $1.7 trillion, or less than 0.2% of all investable assets worldwide, Lavish underlined that Bitcoin is still in its early stages. In its 15 years of existence, Bitcoin has grown remarkably, even though it is only a tenth of the size of gold. It only makes up 2% of the worldwide investment market at $90,000, so there is a lot of space for growth. Bitcoin's potential keeps expanding as its function as a store of value and inflation hedge becomes more widely acknowledged. To learn more about James Lavish's perspectives, remember to hit the bell icon, like, and subscribe to stay updated. Now let's go back and listen to the interview.
Is it FOMO? Is it too late to get in? Are you buying the haircut? What's the outlook here? I mean, where do we go?
Yeah, it's a good question. I get that all the time now from people that I told to buy it when it was in the 20s.
Of course. Yeah.
But I believe that it's still a tremendous risk-reward investment for the long term. Will we see volatility? Fully expect it. We could bump up here against 100,000. I mean, we're right at 99.2 right now, and so we could bump up against that level, kind of push through, have a lot of shorts pile on, and then have it collapse back down into the 90s or even in the 80s. I don't know. Bitcoin is volatile. Yeah. So I expect volatility. I still expect volatility. But I expect it to really have come into its own this year with some of these catalysts.
Okay. So a lot of support there on the technical side too. I mean, it looks like it's overbought.
It looks like it. Of course it does. It always does when it goes into this phase, right? I mean, I look back at the historical charts and it just blows my mind. I haven't lived through a bull market because I came into this industry late. I came in after 2020, early 2021, and so I came in right as we were entering that awful bear market. But when you look at those charts, it's just mind blowing. You're like surely that can't happen again. There's a lot of activity right around this 90 to 100,000 level, and it's natural. 100,000 level it's a mental level for investors, and so to get through that's a big deal. So, but we could push through it, and I almost expect us to push through it and then immediately pull back down underneath, and then struggle to get through it because there'd be a lot of shorts sitting there, just trying to take advantage of that mental wall. So I do expect it to pull back a little bit. But long term, meaning end of year, early next year, I expect it to push through 100 and be on its way, barring any black swan event or economic event or the Fed coming out and saying we're going to raise rates. I mean, that would be a market shock. So, but status quo, I do expect it to just continue on forward because we have a number of catalysts that we haven't even discussed yet that are right here on the horizon or happening.
How much of that is the war risk?
I think that that's hard to gauge, right? Because war risk will help gold, right. Obviously. It really depends on what happens with the dollar and rates, because risk assets typically don't do well. The question is, how close are we to cresting over that? We have to emerge. Bitcoin has to emerge out of risk and into risk off. From risk on to risk off, as people understand that, oh, this is a place to store my value for a long time. Just forget about the volatility. This is a place to tuck it away and trust that it's going to be okay. Much like gold, the difference is you can access it anywhere around the world. So if something happens in your home country, if you're in a hostile area, you can just pick up and leave, know your 12 words, and your Bitcoin, you're not taking it with you. It's everywhere. It's wherever you go. As long as you can access the internet, you can get to it. Bitcoin is just getting started. It's right about $1.7–1.8 trillion asset right now in this chart, and I'll give it to you. We'll pull it up here, but this is my chart. It's a little bit different than the one that you've seen going around. I adjusted some of those for my current projections of where the assets are. But there are $900 trillion of global assets, investable assets. Bitcoin is currently 1.7 trillion of those, which is 0.02% of total assets. It's 1/10 the size of gold. So it has a long way to go here, but at $90,000, it's still only 0.2% of the entire investment universe. And remember, it's 1/10 the size of gold, but gold's been around for thousands of years. Bitcoin's been around for 15. This is tremendous momentum.
Despite its notorious volatility, James Lavish highlighted Bitcoin's exceptional potential as a long-term investment. He called it an incredible risk-reward opportunity and projected a possible spike beyond $100,000, followed by a decline to about $80,000 or $90,000. James noted that for investors, the $100,000 threshold is a major psychological obstacle. He anticipates a brief decline as short sellers take advantage of market moves, even if he still believes Bitcoin will surpass this level. James emphasized the many factors that have contributed to Bitcoin's rise, including as its growing institutional acceptance and its improving standing as a store of value. He did, however, identify some possible hazards that might momentarily alter its course, such as rate increases by the Federal Reserve or unforeseen economic shocks. James also pointed out that Bitcoin's $1.7 trillion market value only makes about 0.2% of the $900 trillion in investable assets globally, as compared to gold and other global assets. James also highlighted the special benefits of Bitcoin, including its accessibility and portability. Bitcoin is especially important during times of geopolitical unrest because, unlike gold, it enables people to safely transfer their wealth around the world using just a private key. According to Lavish, Bitcoin has the ability to completely transform the financial industry and solidify its position as a crucial digital asset for the future due to its quick growth and unrealized potential. Don't forget to like, share, and subscribe for future updates.